Let's be real. Getting rich with crypto is the headline, it's the dream. But you know what's even harder? Staying rich. In this explainer, we're going to tear down the gambler's playbook and build a new one, a real strategy for long-term digital wealth. So, let's dive in. And this quote right here, it gets straight to the point. The potential in crypto is absolutely massive. We all see it. But the road is just littered with traps. The problem isn't the tech. It's not the code. It's the mindset. It's the method. And that is exactly what we're going to fix starting right now. All right, section 1. Let's talk about the biggest hurdle, the main reason people fail. And spoiler alert, it has nothing to do with how well you can read a chart or understand blockchain. The source is clear on this. The number one reason for failure isn't a lack of knowledge, it's a lack of psychological discipline. I want you to really let this sink in. The market isn't your biggest enemy. You are. It's that voice in your head telling you to FOMO into a coin that's already pumped or to panic sell everything when the market dips. That fear, that greed, those are the emotions that wreck portfolios. That is the trap we have to learn how to sidestep. Okay, so we've identified the problem. It's our own emotions. That's step 1. Now, step 2 is adopting the solution. And this is a big one. It means a complete, fundamental shift in how you think, from the short-term gambler to the patient, long-term wealth builder. So look at this. This slide lays out the two different realities. On the left, you've got the gambler just bouncing from one emotion to the next. And on the right, you have the investor, who is driven by a plan, by conviction. I want you to take a second and be honest with yourself. Which one of these sounds more like you right now? Because let me tell you, only one of these paths leads to sustainable wealth. All right, once you've got that wealth builder mindset locked in, it's time to actually start building. And this isn't about throwing darts at a board of random coins. No, this is about making smart, informed choices. So let's look at how we do that. Think about it. You wouldn't build a house without knowing the difference between concrete, steel, and wood, right? Same thing here. Layer 1s like Bitcoin and Ethereum, they're your foundation. Layer 2s make things faster and cheaper. DeFi and AI, well, those are your high-growth opportunities. And stablecoins, they are your secret weapon, your rainy day fund, and your war chest all in one. Every single piece has a distinct job to do. And here is your quality filter. This is the checklist you need to run every single project through before you even think about putting money in. Is the team real and credible? Is anyone actually using this thing, or is it just hype? Do the tokenomics make sense for the long haul? This simple discipline is what separates a portfolio built on solid ground from one built on a house of cards. So you've picked your assets, you've done your homework. Awesome. Now, what do you do with them? How do you put them together? We're shifting from just picking assets to actually constructing a portfolio that's built for growth and for survival. Now, the source lays out this really simple but incredibly powerful model, the 50-30-20 split. 50% of your portfolio goes into those core stable assets, your foundation. 30% goes into those higher growth assets for that potential upside. And this last part is crucial, 20% in stablecoins. This is your dry powder. It keeps you safe in a downturn and gives you the firepower to buy when everyone else is panicking. And here's the engine that makes the whole thing run. First, position sizing. This is what keeps you in the game by making sure no single bad bet can wipe you out. Second, dollar cost averaging. This is how you beat emotion. You just invest consistently, week after week, month after month, no matter what the price is doing. And third, compounding, the magic that takes your profits and turns them into more profits. This is the accelerator for long-term wealth. Okay, let's talk about the elephant in the room. Crypto is wild, it's volatile. But what if all that chaos wasn't a threat? What if it was actually your biggest strategic advantage? This last section is all about mastering the psychology to not just survive the chaos, but to actually thrive in it. This one question changes everything. When the market is crashing, what do you see? A threat or an opportunity? For the gambler, it's a total catastrophe. Panic sets in. But for the investor, for you, it's a Black Friday sale. It's the moment you've been waiting for, the chance to buy high-quality assets at prices you may never see again. And to get you through that chaos, the source gives us these non-negotiable rules. These are the principles that protect you and make sure you're still standing no matter what the market throws at you. Avoid emotional decisions, follow your strategy. Say it again. Hold your private keys, hold your freedom. These aren't just suggestions. This is the bedrock of staying rich in crypto. Look, the market is always going to be crazy. It's going to be volatile, unpredictable, chaotic. You can't control it. But you know what you can control? Your mindset, your plan, and your discipline. And at the end of the day, it's your decisions, not the market's noise, that will determine your financial future.